Hi Sophia, can you explain machinery breakdown insurance? I understand it's important, but I'm still learning the details.
Of course. Machinery breakdown insurance covers the sudden, accidental failure of equipment. It helps businesses repair or replace damaged machinery and can cover financial losses from operational downtime.
So, if a machine suddenly stops working, this insurance helps cover the repair costs?
Exactly. It covers breakdowns caused by internal failures like electrical or mechanical issues, not external events like fires. It's especially useful for businesses that rely heavily on equipment.
What types of machinery are usually covered?
It covers a wide range of equipment, from production machinery in manufacturing plants to HVAC systems in commercial buildings. Anything mechanical or electrical that's essential to business operations could be included.
What are common causes of machinery breakdown?
Common causes include electrical failures, short circuits, mechanical defects, or human error. Routine wear and tear, though, isn't covered, that's considered normal deterioration.
How are premiums calculated?
Premiums depend on factors like the type of machinery, age, usage, and maintenance history. Older machines or equipment that runs constantly usually have higher premiums because the risk of breakdown is greater.
And what's the process when a claim is filed?
First, the policyholder reports the breakdown to the insurer. The insurer will investigate, and if it's a covered event, they'll pay for repairs or replacement. It's important that the equipment was properly maintained for the claim to be accepted.
Are there any exclusions?
Yes, common exclusions include wear and tear, corrosion, and poor maintenance. Insurers expect businesses to take care of their equipment, breakdowns from neglect aren't covered.
I've heard of business interruption coverage. Does machinery breakdown insurance cover lost income?
Yes, some policies include business interruption coverage. If a critical machine fails and halts production, this can cover the financial losses from downtime until the machine is repaired or replaced.
What should we, as underwriters, look at when assessing machinery breakdown risks?
We focus on the type and age of the machinery, the business's claims history, and its maintenance practices. Companies that maintain their equipment properly are less likely to experience breakdowns.
Are there any trends in machinery breakdown insurance?
Definitely. Predictive maintenance is becoming popular. Businesses use sensors and AI to predict when a machine might fail, allowing them to perform maintenance before a breakdown occurs. Insurers sometimes offer premium discounts for businesses using this technology.
That's interesting. Predictive maintenance sounds like a great way to reduce risk.
It is. It lowers the chance of breakdowns and makes our job easier as underwriters because we can assess risk more accurately.